Welcome to Investors Insights, where today's topic is AI influence versus market breadth. Trey is going to discuss some news over the weekend that is negatively impacting the market, and I will be covering some good news on the market breadth. So, Trey, let's get right into it here. A lot of development over the weekend from China that is having a big impact on markets to start the week. Talk about that.
Yeah, thanks, Bobby. We often don't try and cover one news event or be prisoners of the moment on these vlogs. We try and pull things back, look at the bigger picture. But when a news story or a topic is causing one of our indexes, Nasdaq, to be down almost 3% to start the day or to start the week, it bears mentioning and reviewing. So the news out is that the AI company DeepSeek's large language model, which is in the U.S. equivalent to a ChatGPT, the AI models, had phenomenal results, and a lot of research was put into it, and it proved out that it's producing nearly the same outcome of the U.S.'s AI models. Well, that's not that big of a surprise. That's fine. China's a very advanced economy, has a lot of technology, so the idea that they could be on close footing with us is not necessarily big news. It's news, but not major news. The reason the market's reacting so negatively is that the report says that they were able to build their model on just $6 million. While here in the U.S., we're spending tens and tens and tens of billions of dollars building out AI. It's caused stocks like utilities companies to go up because of the expected increase in electricity usage. Data companies, server farms are going through the roof. It costs tens of, companies like Microsoft and Google are spending tens of billions of dollars on AI research. And if this company was able to produce something similar for just $6 million, it really calls into question the whole AI infrastructure. Now, I will put a pause on this because there is a lot of reports that come out of China that may not always be accurate. The technology is real. The cost, you will see in the coming days, or as people report, what costs were subsidized, how much of this cost is actually built in, and other such things. But either way, it's putting a pause on all this AI mania, which was very concentrated at the top. These large companies, these multi-trillion-dollar companies, were sucking up a lot of the oxygen and a lot of the market news, and so we're seeing a breather from them. We'll likely get a lot more news this week, because we have mega earnings. Meta platforms, Microsoft, Tesla, and Apple all report earnings this week. I'm sure they will be asked and this will be discussed. So we'll get a lot more data coming out. I'm surprised this week. I thought we'd be talking about the Fed, which is meeting. Shows how unlikely there is action coming out of the Fed, that this is the top topic this week, and these earnings will be big. So something we're watching closely, because it not just hits these few companies, it does go out into the infrastructure of the companies, the infrastructure of the infrastructure. So there's been a lot of bleed through into other industries. So we're watching it very closely.
Yeah, it's a big deal, because one of the main topics of concern last year was the lack of participation by the broad market. Yeah, we saw the high-flying tech stocks that are being impacted today that Trey just talked about. But with the post-inauguration rally in stocks, as you can see in this first chart, we have seen the number of stocks at 20-day highs above 50% for the first time since July. We like seeing the market performance broaden out because of how the market historically has performed after the new 20-day highs hit 50% or higher. So you can see in this next chart that forward performance, when the percent of stocks making 20-day highs breaches 50%, it tends to bode well for the following month. So looking at 65 days out, 125 days out, even 250 days out, after we see this type of broadening out by the market, we historically have seen positive performance. As always, no guarantees, but this is a positive development that we have been wanting to see out of a market that was very concentrated by the high-tech stocks in 2024. So a lot going on this week. We're going to be following the news out of China very closely and the impact that has. Trey said it, very important week for corporate earnings, and then also the Fed meeting. So very important week for a market that has been performing pretty well. So I want to keep that going. If you have any questions, please reach out to us, call us, email us. We'd love to hear from you. Thanks for watching.